Hi there everyone and welcome to this edition of Startup Central. I'm Avanne Dubash. Lots lined up over the next half hour, but let's keep it straight then with some top stories in the startup world. Well, to begin with, Wakefit, which is a direct-to-consumer or D2C mattress and furniture maker, has raised about $40 million by Investcorp. Some of their existing investors, which include Sequoia Capital as well as Verlinvest and SIG Capital, have also participated in this fundraising. I'm connecting now with Chaitanya Ramalingegowda, who is the director and co-founder at Wakefit. Joining in to discuss this fundraise as well as lots more. Chaitanya, good to have you on board. Thanks so much for taking time out and joining in. Now, let's discuss this fundraise, $40 million. How much have you raised so far? And tell us a little bit more about what the funds are going to be utilized toward.
Over the last three rounds, we've raised about 435 crores. So we've been an extremely frugal company in building the right fundamentals. So this time we've raised about 320 crores and we've been very fortunate to be able to raise in such a funding environment. And the proceeds of this will be predominantly deployed in 3 or 4 major areas. Number one, we will continue to expand our omni-channel presence from about 12 stores to about 100 stores. Number two, we will continue to strengthen our supply chain where we have about 23 warehouses today. And we have the ability to deliver and install furniture in these cities. We will continue to strengthen that. And number three, we will continue to build brand as part of the growth initiatives, because the more the visibility and awareness of the brand gets higher, the better it is from a consideration perspective.
Okay, fair enough. Now, I also understand that, yes, indeed, and like you said, in a very tough environment like this, it is tough to, secure funding. But at the same time, I understand that the focus now of Wakefit is going to be a lot towards some of the smaller towns where you're looking to expand your stores. I just want to first start up by understanding what took the company so long to get into offline, because it was only a few months ago that the company was operating completely online. So what was the reason for this, and what are the plans to push your presence in some of the smaller towns like Coimbatore, Mysore, Patna, etc.?
Sure. Till the time we were predominantly a mattress and sleep products company of one, we were not comfortable opening up stores because our calculations showed that if we just open up a mattress and a bedsheet store, we will have a much longer payback period, which we were not comfortable with. We were very comfortable building the company to about 636 crore last financial year, predominantly online, because we knew that the unit economics, the payback period and the return on investments was much, much better. Once we expanded fully into furniture about 2 years ago, our calculations showed that the payback period would be much better, because now customers had a larger catalog of products to choose from, even if they came to the store or if they researched online and then dropped into the store. So we realized that the odds of them buying something at least once they visit the store would be higher, and hence payback period would be lower. So what we realized through these calculations has also panned out in actual data. We've realized that the average order value in the offline environment is nearly 2x of what it is in the online environment, because now they're comfortable buying 2, 3, 4 products at the same time. And number two, it's become a family decision where people come to the store across 3 generations. You see a vehicle stopping and grandparents, parents, grandkids, all 3 of them step out. And then it's a family outing for the next 1 hour where they pick and choose what they like for their home. So this has also shown that the payback period is as low as about 9 months for us, while traditionally payback once you put up a store is nearly 24 to 36 months for a traditional store. So I think our hypothesis was that, and we are happy that it's proven right.
Okay, now you clocked about 630 crores by way of revenues in FY22. You're aiming at close to 950 crores in FY23. What is your revenue run rate currently, and what is it that you're targeting by way of revenues in the next few years?
In our kind of a business, Avan, the revenue run rate monthly does not make sense like a SaaS business, because we have a very cyclical kind of a behavior where the Diwali quarter really does well. Q4, which is January, February, March, does the second best in any financial year. But broadly, at a quarterly level, we are clocking about 200 to 220 crore every quarter at a bare minimum. That means if you just take a standard BAU quarter and multiply it by 4, we will already be somewhere around 800 odd crore. So this financial year, we are hoping to close around 950 crore like you talked about.
Okay, fair enough. Now you have three businesses mainly, that's mattresses, accessories, and furniture. Walk us through how much each of these contribute and what is the run rate or what kind of revenue growth projection rather you're seeing for each of these.
So you're absolutely right. We are actually three startups rolled into one. Because if you look at the industry, traditionally mattress companies have always been mattress companies. Accessories, these would only make bed sheets, comforters, pillows. And then there's a third set of companies which only made furniture. So given our way of evolution, we end up competing with three sets of industries. But that has actually become a blessing in disguise because mattress is a good thin wedge to enter the consumer's home, and accessories are a low cost way to try the Wakefit promise, while furniture is the high ticket size, larger home decor kind of items. And all three of them are in different stages of maturity. Mattress and accessories, being 7 and 5 years old respectively, are already EBITDA positive, profit turning a line of business. And furniture, because it's only about 12 to 18 months in full-fledged intensity, they are about to turn contribution margin positive, and then they will turn EBITDA positive in the next 2 quarters. About the growth rates, the question that you asked, mattress is still growing at about 45 to 50% per year. Accessories is growing at about 30-40% per year. Furniture, given that it is such a small base of about 200 to 20 crore, is still growing at about 80 to 100% year on year. So that's where things are heading towards over the next 24 months.
Okay, what are the plans for an IPO in terms of timeline, and are you completely profitable?
Every entrepreneur's dream is to go public and build an institution that lasts beyond them and become a completely professionally managed one. So Ankit and I also have the same dream, but I think it's too early to talk about it. But in terms of internal readiness for a public listing, we hope to be there somewhere in the next 2 years or so. External right timing, we'll have to figure that out as we go along.
What about competition? Because within this space, now that you're going full-fledged home decor, there are a lot of formidable players who have been around a lot longer as well. Are you worried about that eating into your market share?
Actually, that is going to be a tailwind for us because if you notice, every single e-commerce category, furniture is one of the least penetrated in the organized sector. So India's furniture market is supposed to be 17 to 20 billion dollars on even the most conservative estimates, but the organized part is just a few thousand crore. So that means the larger the companies and larger the organized players there are that work with us to build this pie, it's actually better for us where people move away from unreliable, low quality woodwork that is done in the local stores and workshops and move towards trusted brands like ours. So it's actually good. In fact, we are hoping that there are 4 or 5 large companies that work together with us to sort of build out the furniture part. On the mattress side, again, it's a 17-18,000 crore market, and the organized part is barely 5-6,000 crore, and we are at about 600 crore in mattresses this year. So given these, I think there's a lot of room for pretty much everybody to continue to grow at this pace.
So what's the long-term growth plan as you're looking to really diversify into new product categories? How do you plan to grow your omni-channel presence, and where do you see yourself scaling up?
We're very excited about the omni-channel growth. So current 12 stores will hopefully become about 100 in the next 24 months. But there again, we are not taking the approach of spraying and praying or having a vanity metric of saying we will launch in 300 cities, 400 cities. The idea is to be concentrated. So even though we are looking at about 100 stores, we'll probably do it in maybe 20 to 25 cities. That's all. So the larger towns and cities will have more than one store, and the smaller ones will have one store each. And this is good enough to be able to do a good job, go deep into the market, service those customers, rather than just having one store each in a very far-flung place and not being able to do justice to the promised delivery date. So that's the approach we are taking for omni-channel expansion. Very calibrated, very frugal.
All right, we wish you all the very best, Chaitanya. Thanks so much for taking time out and joining us today on Startup Central.
Thank you for having us, Avanne.
All right.